Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week is Dan Walkow. Mr. Walkow is a portfolio manager in White Rock, South Surrey, who specializes in cross-border investment issues. And Dan, your Canadian customers, and even though the majority of your client base is American, you still have a lot of Canadian customers, and you're a Canadian yourself. What are the most common wrong assumptions we Canadians make when we think about moving to the United States, even part-time for that little hot and dry spot for those long Canadian winters?
I guess a couple of issues I probably should address are the common mistakes when people move across the line, less so than the snowboard issue because it's a temporary issue.
Okay.
Most of the work we do is in permanent residency issues. But let me give you a perfect example of probably the most common thing I see and issues which we have to address when we acquire clients that go across the line. First off, the U.S. tax system is totally different, and the IRS is totally different from the Canada Revenue Agency. The tax laws are different. What may be, for example, in Canada, people are used to capital gains on an average taxation basis. You buy 500 shares for $10, you buy another 500 for 20, your average cost
is 15.
It's 15.
Sure.
In the United States, it's first in, first out.
Oh, okay.
Okay. It's not average cost. And you can buy, for example, in the United States, you can buy a security for $10 and a second tranche for $20, and you can elect to sell the first 10.
Okay.
Totally different, right?
So each transaction is
so you can manage it.
Okay.
I used to think, when purely as a Canadian, that the Canadian tax laws were complicated over the years, or they're nothing compared to the regulations in the United States. In fact, ours is quite much simpler. And you may be surprised to know, certainly from an investor standpoint, the Canadian tax environment, as much as Canadians carry on about it being punitive, is much less restrictive in many ways. But let me go back to your question about one of the most common errors that people make when they cross the line, and it's to do with retirement programs.
Okay.
For example, the IRS does not recognize, the tax authorities in the United States do not recognize an RSP, a RIF, or a LIRA as a tax-deferred account, such as we do in Canada.
Oh.
It's fully taxable, unless you take some selected provisions. There is a tax treaty. It should be addressed. You think it would be, but it isn't. And so you have to file a form every year. If you fail to file this form with your tax return, your U.S. tax return, then you are taxable from the date of entry into the United States on all gains, all earned income, plus interest, plus penalties.
So is the smart strategy then, if and again, we're talking about permanent residency, and we'll come around to the snowbird part, because that's where most of us live, or at least fantasize about living. But on the matter of becoming a permanent resident, with your RIFs and RSPs and so on, is it a smart strategy to just basically leave that stuff tucked away safely at home in Canada?
Problem is, you have to have somebody to manage it, like us.
Okay.
Because you won't find an advisor in the United States who provides management of Canadian retirement accounts. Let me carry this one step further. If you happen to move to California, the current situation is such that, as I mentioned, the IRS does not they do not recognize a Canadian RSP as a tax-deferred account. But you can file a Band-Aid form every year that defers it one more year, and you can just keep deferring it, which is effectively a tax-free account. However, the state of California does not recognize even that. So what has to happen if you move to California? You are taxable in the state of California on all earned income, that's capital gains, dividends, and interest, within the context of your RSP, no tax deferral. And you're taxed at the state rate, anywhere between 1% and 9%, California state tax on any earned income in an RSP. People forget to file this form. They go down and they don't know. So inadvertently, they'll be down there for 10 years and they say, my God, we moved down here at $200,000 in an RSP, now it's worth $300,000 or $400,000.
Right, if they're lucky.
Did you file their 8891? Well, no, what's that? And there's no excuses. You know, ignorance of the law is no excuse. So you owe taxes and penalties.
So by being unaware of these tax implications, you could effectively wipe out the benefits of an RSP and other deferred tax programs.
Absolutely. There's ways around it. I mean, we're in a, I think, like to suggest that we're in a financial solutions business, and because there are workarounds and there are things you can do to, for example, you can avoid paying tax on an RSP. You can continue to move to the United States, have an RSP, roll it to a RIF, and continue to enjoy the tax-free growth of an RSP while you become a permanent resident or retiree in the United States. There's no magic to it. It's just making sure you do it right. And you'll have all the benefits as a domestic Canadian through until you pass on. And it's the same coming back the other way with an American coming to Canada. There is a way, there are ways to manage things where you can still enjoy all the benefits. There is a misconception out there that is reasonably common, is, oh my gosh, I'm moving to Canada, I have to cash in my IRA.
Right, right.
And
not the case.
You don't have to.
Okay.
You don't have to cash in your RSP. There are ways to do it, and it doesn't. And you know, the question certain people ask, well, it must cost a lot to do that. Well, it doesn't.
I'll get you to hold that thought, Dan, if you will, please. We need to take this quick break.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day, and to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.